Two big retailers, Walmart and Home Depot, out with results today. Both stocks up after beating Wall Street estimates on both the top and bottom lines, despite rising costs and also macroeconomic challenges. For more on this and what it tells us about the consumer, we want to bring in Jharonne Martis, Refinitiv Director of Consumer Research. It's great to have you. So we're looking at these results, judging by the street's reaction, very pleased with the numbers that we got today. But of course, Home Depot, at least for them, average ticket sales were down, yet the amount people were spending were up. So you would think it all has to do with inflation. I guess, what's your big takeaway from what we're seeing so far this earnings season with retailers?
So Walmart knocked it out of the park. And what we expect to see tomorrow is that Target and Lowe's are going to be posting very similar numbers to what we saw today. But yet Walmart and Home Depot are going to be the two strongest within each their own category. The one key indicator that Wall Street is paying attention to is really the inventory levels. We saw that Walmart today slashed the inventory levels by half from what we saw in the previous quarter, which had a really good response in the market today. We will see very similar patterns tomorrow with Target, but not at the strong levels that we saw with Walmart today. The other thing Wall Street is also keeping a close eye on is the levels of promotions, also how this will affect gross margins, and especially guidance, because if the companies maintain their guidance or lower their guidance, it could obviously signify the challenging macroeconomic environment that we're having right now, but it could also be a sign that the consumer might be pulling back even harder than analysts had already projected.
A lot to dive inside these numbers, in particular with Walmart saying people are trading down to beans and peanut butter and cheaper proteins. But a really interesting observation that 75% of their market share gains came from households making more than $100,000 a year. What does that tell you about the consumer and where we're headed?
It's telling us that the consumer is very worried about inflation and about the economy. In fact, when we look at the Refinitiv Consumer Confidence Index, it's what has kept it stable has been the fact that consumers have been feeling confident in their job security. However, November marks the first month where we've seen that a lot of the tech giants have already warned us about significant layoffs. And it also marks the first month of the rising unemployment rate. So what this means is if consumers start seeing that their friends and families or relative or people in their circle start to lose their jobs, then they're going to hold back. They're going to put their hands in their pockets and hold back on spending. They're going to start getting worried about their job security. So it's going to be very interesting to see this next consumer confidence index to see if consumers are already feeling somewhat worried about that, because that is the one secret ingredient that has kept the consumers engaged in traveling and going out and eating at restaurants. If the unemployment rate starts to go up, then we're going to be very much concerned about the consumer.
And people could potentially start changing their shopping habits, their spending habits. So, Jharonne, I want to go back to what you said about inventory levels in Walmart. Significant improvement there. What are they doing, and how had they better positioned themselves compared to the comparison that you made to Target? And you don't expect as big of an improvement there, I guess.
Well, what helps Walmart is the fact that they rely so much on their grocery sales, and consumers go there because we're seeing that staples is outperforming discretionary spending, right? So consumers have to eat, and they're going to Walmart for those everyday low prices. It's also very interesting to see the strategies that Walmart is doing, because they know they're gaining all these new consumers and they want to retain them. They want to retain them because they know experiences are very important to consumers. So, for example, the Thanksgiving dinner, they're making sure that the prices remain the same, unchanged from last year, that the inflation doesn't impact them. They want to keep those new consumers permanent, and they want to keep them happy. They're putting them in the center. They're making the entire experience consumer-centric.
So tomorrow, a crucial day, Target, TJX, and Lowe's, but let's push Q4 and holiday sales. There's one word that stood out from the report with Walmart. It was promotional. What's your expectation for holiday sales?
So in a collaboration with StyleSage, Refinitiv discovered that the discount penetration, which means the amount of merchandise on sale, has gone up significantly, especially in time for Black Friday and going into the holiday season. What's interesting, though, is that the average discount offered has actually come down. So what this means is that retailers are offering more merchandise on sale in order to lure those shoppers in, but then they're not offering them as high of as a discount that they did in the past in order to safeguard those gross margins, but move that merchandise.
You mentioned that is really interesting. And you mentioned the outperformance clearly that we are seeing from Walmart and Home Depot because how they are positioned among some of their peers outside of those two giants. So who else do you think is set up to really persevere during what is expected to be a pretty challenging couple of months?
So when we look at the holiday season, we are expecting to see a 4% growth on sales. However, because of the rising cost, estimated earnings growth rate is expected to decline 17.5%. So what this means is that 10 out of the 11 consumer-related industries are negative. Only one is positive, and that is the hotels, restaurant, and leisure sector, and expecting a growth rate of 248% positive. And everybody
248%.
And everybody else is negative. So this is telling us that consumers are spending their money again on experiences over things, which is why Walmart's strategy is very smart, because they know that consumers are all about having Thanksgiving this year with their families. They're going to be traveling, and if they can lock in, that the consumer, the feeling that they're not paying higher prices for a Thanksgiving meal, then you have a consumer for at least another year.
It also explains why airlines are able to pass on the higher costs. People are still willing to travel this holiday season, but we'll see whether or not
it's the revenge travel, you know, after being cooped up in the house for 2 years.
You gotta ask yourself though how long that's going to be the case. All right, Jharonne, Martis, thanks so much for joining us. Really appreciate it.